great to have you with us.
Great to be here. Thank you for having me.
Well, Sergey, we've got a lot of topics to discuss. Big focus on tokenization, as well as your outlook for ETH and Bitcoin, with the recent approval of the ETH spot ETF. But before we get into that, for our viewers that are not that familiar with ChainLink, give us a brief intro and a breakdown.
So ChainLink.
Before he begins to give you a brief insight on ChainLink, right? Welcome on into another episode of Crypto Dough. Crypto Dough is here. So only thing I ask for you guys to do is subscribe to the channel and help me get to 10,000 subs. Hit that like button, hit the bell notification as well, and leave those comments down below. Today, we're going to talk about it, to me, an undervalued technology, which is called ChainLink. When I did the token landscape, which I'm going to show you guys another visual of that, ChainLink, also known as Link, right, was the only thing that, to me, connected everything. Once you get to a certain level and you want connectivity and you need that bridge, right? ChainLink is one of those technologies. It may be basic, right? But it's essential. It's essential to the space. So I like ChainLink myself. We're going to dive into it. Probably pay about 10 minutes of this video. Then I'm going to show you some graphs about ChainLink. Also, I'm asking you guys to go inside of the description. I'm going to pin crypto.com link. Go use the referral code. I get money, you get money. Together we can go further than Wells Fargo. It's a great time to actually start to invest in crypto. Excellent time. We already had a pullback, and now we have a meeting with David Sack today at 2:30. So I want to make sure that I cover it with you guys. The David Sack meeting today at 2:30. He is considered the crypto czar. So let's get into it.
Is infrastructure that allows smart contracts to operate and do advanced kind of operations. It's also a set of protocols that allow the blockchain industry to function across chains and in relation to data. So in the internet, you have protocols like HTTPS, right, which serves websites like YouTube or whatever. And you have TCP/IP, over which information moves across the internet. ChainLink is a similar set of protocols and standards for how the blockchain industry works with data and connectivity across chains.
That's what people don't understand. Most of these things are blockchain technology. So I'm going to break it down in layman term, right? You understand that blockchain, right, is different blocks of data, different blocks of information that's connected, right? It's time stamped, it's recorded, it's connected. It could be decentralized. It can move in a different algorithm, XYZ, right? But to each blockchain, you have a link. It's a link that connects each block. Consider that to be ChainLink. And repeat, it's a link that's connected to each block. Consider the link in between those blocks to be ChainLink. That's how essential ChainLink is to me. That's why it's part of my portfolio. Let's go.
And this is important because without that infrastructure, you wouldn't have the internet. And without ChainLink, you wouldn't have the growth of something called DeFi. And you wouldn't have a secure way to connect across multiple chains to form what we call the Internet of Contracts. So ChainLink is sometimes...
So without ChainLink, you won't have something called DeFi. What is DeFi, people may ask? The student that just came in, the person that just came in may ask, hey, what is DeFi, DFI? DeFi means decentralized finance, right? Basically, it is not centralized. Centralized meaning that it's a conglomerate. We're living in a centralized system right now with the fiat money. It's the center, and then they give it out to you, XYZ. The bank is in the middle, then they give it out to you. Decentralized is the bank is not in the middle. No. It's between you and the individual. So peer-to-peer transaction, right? That's considered decentralized. It's just better for the space. I think decentralization is the key in order to us to have a better monetary system. It must be decentralized because centralization don't work. Obviously, we've been running centralization for this long. Why haven't it worked? It benefit a group of people, but it doesn't benefit the people that's working hard, that's putting their money inside of these decentralized fiat currency platforms or fiat currency protocols that don't really make sense. By the time you look up, you got to deal with taxes. You have to deal with your 401k. You got to deal with so many different things that won't add up to the DeFi space. So this is why money is so important. Understanding and studying money is so important. But let's continue.
A little bit difficult to understand because it's a low-level infrastructure technology. It's kind of like the pipes of what makes a lot of advanced blockchain and smart applications work. It's kind of below the surface.
Right.
And similarly, in the internet, there's many technologies below the surface that power the internet.
Right.
HTTPS, SSL, TCP/IP. That's the kind of technology that ChainLink is.
And you have really revolutionized the way smart contracts.
Some people may call it basic tech, right? But sometimes that's what makes the space actually works. That's what literally makes this blockchain DeFi space work. I'm telling you, ChainLink is an important part. I knew ChainLink was important when I figured out that mostly companies, when they hit a certain threshold, you have to have ChainLink. You have to incorporate ChainLink. For example, XRP used ChainLink. That's one of the biggest bags that I have. XRP used ChainLink. That means that it's vital. It is literally vital to the space, especially the DeFi.
Work with real-world assets and real-world data. Explain basically what that is for our viewers, the smart contract idea.
So a smart contract is a technical agent that both parties can rely on without any trust assumptions. So when you and me do a transaction, we have trust assumptions that I will honor the transaction, or that you will honor the transaction, or if I'm a big institution and you're a big institution, we still have assumptions that we won't renege on our agreement to fulfill kind of a delivery versus payment. You buy something from me, I send it to you. Smart contracts are basically on-chain code where you can encode the conditions of our agreement,
right,
and neither you nor me can affect those conditions. So we can have a smart contract that says, if it doesn't rain, then the crop insurance gets paid to me. And if it does rain, it doesn't get paid to me and you get my premium.
Right.
But you, as an insurance company, would no longer have the ability to decide not to pay me,
right,
even if it didn't rain, because the system that is executing that agreement is outside of your control.
Which is basically, it's a system that's holding people accountable for their contracts. They're smarter than the actual written contracts because you can find a way how to defer. You can find a way how not to do things. Once it's recorded on the ledger, once it's recorded on the link, it's no changing it. That's your obligation unless y'all both sign something for it to be changed. But in other words, you're being held accountable for your actions. That's why I like ChainLink.
Traditional insurance company, that system is completely within your control. So even if it doesn't rain, you as the insurance company could choose not to pay me. Then we'd have to go through a lengthy legal process.
Right.
So smart contracts are basically these technical agents that operate in this infrastructure called blockchains and Oracle networks. And that's the infrastructure that we kind of work on.
Right. Eliminating the trust factor, condition is met, A triggers B. There's no room for confusion there. Just to get that basic background for our viewers, let's now focus on what you were talking about at Consensus here. And the crux of your presentation was around tokenization, saying that all transactions will eventually be on the blockchain and that we're, in fact, at a tipping point where all of the world's biggest institutions are starting to look at how they're going to put their value on chain. Echoing sentiments that we heard from Larry Fink, the CEO of BlackRock, the world's largest asset manager. Earlier this year, he said that we believe the next step forward will be the tokenization of financial assets. And that means every stock, every bond will have its own QSIP. It'll be one general ledger. Every investor will have their own number. We would have instantaneous settlement. Now, obviously, this is going to be a huge step in revolutionizing traditional finance with blockchain, with crypto. Again, as a background, explain what tokenization is before we get into why this is so momentous.
Sure. So tokenization is taking the ownership rights to something like a gold bar, a piece of real estate, an equity, a commodity, really anything, and putting that ownership right into a blockchain in the smart contract we just discussed. Bitcoin is an example of an ownership right for this synthetic instrument called Bitcoin.
Right.
Real world assets are an ownership right for real world things, real estate, commodities, equities, gold, and so on. And the transition that Mr. Fink describes is the one where the use of tokenization will no longer be limited to, we make a token about, table coin, and table coin is worth whatever you and me are willing to pay for it in the open market. That's how tokenization has been used so far. That is not really a financial product, and that's not participating in something called securitization, which is basically taking something real in the real world and turning it into a financial product. The real world asset trend is the next stage. The first stage of tokenization was literally millions of cryptocurrencies, most of which have.
Now, tokenization is going to be used in every sector. In every sector, from stocks to collectibles. That's what's happening right now. See, I read this book one time. I forget the name of it, but the main word was tokenization in the book. And I'm gonna leave that in the source, right? I got to go through my book collection. And I read it beforehand, and it said everything that you could think of: real estate, contracts, collectibles, everything. And I read this book at least 10 years ago, right? It will be tokenized. That's the new way of the financial world, tokenization. Now we have crypto technology that blocks that up, that backs that up, along with blockchain, along with Link, along with different hash graph, along with all these different things, digital ID, and all these things, right? This is what's making the space so innovative, because it's like everything is coming to be at the same time. Everything.
Have no value. The next step of tokenization is applying that same technology, but to real world assets.
So you, again, like Larry Fink, have said that all credit, all commodities, all derivatives are going to be on chain. Why? Why do we need this? Why is this better than the system we currently have?
Sure. So there's kind of two fundamental reasons. The first fundamental reason is efficiency.
Right.
Is, for example, something called atomic settlement, or T+0 or T0. So the US is going to T+1, which means it takes a certain amount of time for transactions to settle. When transactions take time to settle, like 1, 2, or 3 days, if it's a $100 billion transaction, we can't gain interest on that money.
Right.
So I'm stuck in some transactional system where for a few days I don't get interest on the $100 billion that I paid for something. And even a few days of 4.5%, 5.5% interest on $100 billion is a lot of money. That's a very basic example. That's an example around payments and partly collateral management. So the first thing is that people like Larry Fink are mired in all kinds of legacy problems that cost them literally hundreds of millions of dollars about how to rebalance their portfolios, about how to buy and sell assets, about how to receive payment, about how to prove things to people like the NAV, the valuation of the fund. These are esoteric middle office and back office problems, which the average person has no interest in because it's not their job, it's not their problem. But these problems are worth hundreds of billions in fees and complexity and risk. And that's one of the reasons people like him are so excited, because if you're a craftsman doing something and you had one tool and someone gave you a much better tool, you're excited about that. So that's one level of kind of why it's very important. And that's one of the big driving reasons why the DTCC, Clearstream, Euroclear, basically the three biggest clearing and settlement systems in the world are now actively talking about transitioning to this model. The other side of it is market demand, right? So the ability to tokenize things has two really great properties to it. The first one is if you tokenize traditional assets, money market funds, treasuries, you basically put them on chain, and then there's a market that wants to get them on chain because they can use them as collateral. So they can use them to back things on chain. And this is what people in the on-chain world have been doing or trying to do for many years. They've been trying to create baskets of assets that are controlled in a private key-based way. So traditional financial instruments are more attractive on chain because people want to own them on chain in a direct way where they control the asset, just like they control a Bitcoin. Then there is net new assets. Net new assets are like tokenizing real estate for fractional ownership of a multi-$100 million building. Tokenizing private equity funds where you...
And this is the only way to have fractional ownership. So say for instance, for example, right? I'm gonna break it down to a third grade level. Say for instance, you and your friends, it's 10 of you guys, and you say, hey bro, let's go put up and let's go get a building. Let's go get an old apartment building, right? A commercial building. We're gonna split this 10 ways. Each person put up 100. Let's just say each person put up 250,000, right? Each person put up 250,000. We're going to use that as down payment to get everything started. Two of the people keep your 500,000 in case for renovations or everything else. But we're going to put together a smart contract on a chain that that explains all of these things. And when it grows, it grows. And if you want to sell, then you can sell, but you own a fraction of it. You don't own the whole thing. Then, for example, you might want to say, hey, go find 5 people that want to be a seed investor, right? Add them to the contract as well. So, and this is on a ledger. So everyone has the right to see it, view it. If they want to come out, they can come out depending on what governance you set up for it to happen. So this to me is extravagant. It is extravagant. I'm going to play a couple of more minutes of this, right? Probably about, let's watch it to about 10 minutes. Then I'm going to go to ChainLink chart.
You would have had to have 5 million to get in. Now it can be at 10,000. Tokenizing carbon credits, tokenizing municipal bonds, tokenizing even gold, that you can then go and redeem that gold in person against a cryptographically guaranteed token that you control, right? So then there's this whole category of net new assets that are not currently in the financial system, but once you tokenize them, tokenization is just a better, more efficient way to put them in the financial system.
Right.
So digital representation of ownership of an asset on chain, on the blockchain. And how big do you anticipate this market to be?
Hundreds of trillions. Just take every market. Take the gold market, the real estate market, the debt market, the derivatives market, the securities lending market, all of these, all assets. What's fundamentally happening is you have a new format for assets,
right?
For ownership, and also for the data associated with that ownership. And the data is now appended to it in a way that proves things to you about the underlying asset. So the last time there was this type of transition was in like the 60s and the 70s, where people transitioned from paper to basically databases.
Right.
That was the last time that value, all the world's value, used to be on paper. And then databases appeared and computer systems appeared, and the efficiencies and the benefits of computer systems and databases, even before the internet, right, in the 60s and 70s and 80s, were so vast and so great that all the world's value transitioned from paper into a database record. All the world's value. It wasn't some of the world's value. You don't have any piece of value right now that you own, other than whatever you have in your house somewhere, that isn't in a database. But in the 60s and 70s, all of that value would have been in paper certificates, or even other paper ledgers. So it's that type of transition where now we're going from databases, which you and me can't trust, right? So one of the fundamental differences is that you feel you have money in Silicon Valley Bank. And if you talk to people about their account in Silicon Valley Bank, they're in the Valley, they're genius tech entrepreneurs. The US financial system is wonderful. 2 weeks before Silicon Valley Bank's collapse, it's like you ask them, what degree of ownership and real control do you have over this asset that you have in this database? They will say complete control. Silicon Valley Bank.
No, you don't.
2 weeks after Silicon Valley Bank, you ask them, what's your relationship with this asset? It's a great question. We don't know what our relationship is with this asset. But your relationship with a private key that you control, and that private key's...
If you don't own the key, you don't own the product. If you don't own the key, you don't own the wallet. So basically, when you have these, your assets or your money inside of a database, right? Who owns the database? Silicon Valley, Wells Fargo, Bank of America. They actually own these things. You don't own it. So this actually, ChainLink actually, and tokenization actually gives the people the right to finally own the keys to unlocking those doors. Instead of, hey, can I have the key? Can I use your keys to open these doors? You no longer have to do that. You are the key owner now. It's your responsibility. This is your ledger now. For the first time in history, you get to own your data. Literally, you get to see your data. You get to open up your data. You get to sell it. You get to tweak it. You get to put governance on it. You get to do fractional things with it. You get to buy assets, other assets in different classes with it. This is amazing.
Mathematically guaranteed control over an asset is very different.
So does it bring ownership back to the individual in a more concrete way?
Yes.
Because there have been some concerns about tokenizing everything and it infringing on privacy, it infringing on decentralization in a way, it infringing on autonomy. I see you're laughing at that. Why is that comical? Why should people not be concerned about this trend of tokenization?
Because the amount of centralization and control other people have over everything they own, and more importantly, the underlying value of everything they own, is extremely high. I would say it's currently, yeah. So people are like, I have a brokerage account and I have a bank account. That's great. I control all this stuff.
And I like how he said that. You don't control nothing that you don't have the keys to. Let me repeat. You don't control anything that you do not have the keys to. No keys, not your keys, not your product, not your service, not your chain, not your wallet. This right here, ChainLink, is giving you the keys to the wallet. Literally. This is what blockchain technology is. And it's the link in doing that. This is so important. I was supposed to stop this video, but it's intriguing to me because I understand the tech talk. I really do. I understand it. But I'm going to break it down for the people who don't. Imagine you having keys to your house, or for instance, right? You have a mortgage. You have a house. Let's do real estate. That's a common thing. You have a house. You're paying for your mortgage. You don't own the house. You don't own the mortgage. The banks do. The banks loaned you money, which is called a mortgage, and you paying on that. So if you defer on your payment, the banks can say, hey, well, we own it and we own the rights to it. We have the keys to it. Let's sell it to somebody else. Now, if things are tokenized and you actually own the keys, right, then you become the bank. You already have the service and or the product, which is the home, right? And say, for instance, you might want to say, you know what? I really can't afford this home right now, but I'm going to move my cousin, my aunts, and let's just move 3 or 4 people in. And I'm going to put a smart contract on that. And each person might put up, let's just say the mortgage is $1,600. Each person might put up $400. 5 people. That's 20 something. What's the name? The rest remaining is for regular lifestyle and or to double pay down on the actual thing, on the actual mortgage that you govern. Absolutely amazing. This is a game changer. I don't think people understand what's taking the infrastructure, not the infrastructure, the monetary system is due for infrastructure upgrade. And the infrastructure upgrade is blockchain technology and tokenization. And ChainLink has a big part to do with that.
Yeah. Let's take a look at countries that have bank default scenarios where they institute capital controls, like Greece, where you couldn't get more than $65 a day, whether you were an individual or a business. And then take a look at the Bitcoin wallet registration numbers from that time period in Greece. And also take a look at the wallet registration numbers in what people thought were going to be the next economies to fail, like Spain. So those wallet registration numbers go up like hundreds to thousands of percent, because people realize that their relationship with their assets is a fiction.
Right.
And it's a fiction that benefits people with a brand that have over 100 years with their brand.
Banks.
And their logic is, I have the legal system protecting you. I could theoretically deny you access to your assets like Silicon Valley Bank did, but I won't. Because why would I? And then the situation changes, like in Greece, and capital controls are implemented, or the situation changes and the solvency of the bank is in question because Moody's decides to do their job and clarify something, even to a very small degree, and all of a sudden you can't access your life savings, right? So I think what has happened at this point is that brands and institutions are unbelievably expert at assuring everybody that they are safe and that it is safe to put your value and your assets in the system.
Which is unsafe.
What blockchains do, really, another way to look at it is it creates what we call the verifiable web.
Right.
And that has 3 properties. The first property is that you can verify everything going on in the system. Well, actually, no. The first property is you can verify how the system works before you join it. Then you can verify what's going on in the system at any one moment in time. So imagine if you knew every single piece of information that the CEO of your bank knew. Like you had access to exactly the same information. There was no delay between the solvency information of your bank and what you knew and what the CEO of the bank knew. So nothing could be hidden from you.
Right.
That's the second property. And then the third property is that you can always choose to leave the system under the conditions you initially verified, right? And this is where private keys come in.
Right.
So this is the new world we're kind of shifting towards.
So, Sergey, in a way, it takes some power.
Okay, I'm gonna let you guys watch the remaining of that video. The video is about 50 minutes long. I left the link inside of the description. So now let's go to a little bit of charting on coin market cap, and we're gonna check ChainLink out as we speak to give you guys some price points on what's going on with it. Right, it's at $20 right now. You guys can see that. Let me move on down to the screen. And then let me eliminate that real quick. And then also let me zoom in because I hate when it's choppy. Okay, can you guys see that better? Excellent. ChainLink is number 11. Can you guys see that? It's number 11. It's currently right now, let's just say that it's $20.56. The market cap is 13.12 billion. The volume right now is 1.17 billion. That's a B, right? The FDV is 20.56. Fully diluted volume is 20.56 billion, right? Supply is 1 billion link. In the day, it is down 18%. In a month, it's down in 7 days, it is down 13.35%. In 1 month, it's down 11%. In a year, it's up 11%. And overall, it is up an egregious amount. You guys can see that, right? Now, where can I get this from? Right? ChainLink, you can get it from BTCC, Binance, Uniswap, V3 Ethereum, Binance, Bybit, Coinbase Exchange, OKX, Upbit, BitGet, Kraken, KuCoin, and they have 60. So you can get it from a lot of places. Normally, this number is 13 right here. They have 60 different sheets that you should browse down and see. I'm gonna leave the link to coin market cap, and I'm gonna leave the link directly inside of the description so you guys can go check that other source out as well. I'm doing that currently right now. I do everything live, so we live, baby. It's in the description right now. Now, some news about Link. ChainLink retest symmetrical triangle breakout. ChainLink is about to break out, just like Cardano, just like it's a lot of things that's about to break out right now. Just like XPR, hell, XRP is gonna break out too. Everything is breaking out. It's February. Today is also the day that they do the crypto czar David Sack meeting at 2:30. So it's only 1:04 right now. I'll probably cover that. I'll probably cover that for you guys. I'm going to do my vote. Of course, it's 88% bullish, 12% bearish. So the bulls are winning on this one. No bull. This is a wonderful chart. You can see the technicals and be aware of it. Whoa. We're right here, right now. Could be bouncing down on a downtrend, but look at the legs up. Yeah, it's out of here. It is out of here. If you can see that, it is out of here. Okay. Next thing, let's go to ChainLink Analytics. I like this one right here. The addresses holders 0 to 1K is 82%, right? So this is money value. From 0 to 1K is 82%. From I'm part of this group right here, the 1K through 100K, 16.93%, and then from the 100K above is 0.6%. The whales have it 48.13, and the others, which is us, have it 51.87. So the whales, yeah, they can dump on the market because it's half and half, but at the end of the day, we have some form of control too. I like that. Let's give you some fun facts and let's read about ChainLink, right? Because we looked at the videos on Keto, and I left that in the link too. Keto News to give you a visual aspect of it. But let's get the verbiage. Founded in 2017, ChainLink is a blockchain abstraction layer that enables universal connected smart contracts. I don't think y'all understand what that means. Universal connected smart contracts. They are the highway. They are interoperability. Yes. Through a decentralized Oracle network. Decentralized is the key right here. Decentralized. We don't like centralized. We do not like that word right there. We like decentralized Oracle network. ChainLink allows blockchains to securely interact with external data feeds, events, and payment methods, providing the critical off-chain information needed by complex smart contracts to become the dominant form of digital agreements, right? So they're like the digital blockchain data center. They're the blockchain data center. At the data center that you need in order to bridge whatever assets you want to bridge or whatever technology you need to bridge to that data center. The ChainLink network is driven by a large open source community of data providers. Open source, I like that. Node operators, smart contract developers, researchers, security auditors, and more. The company focuses on ensuring that the decentralized participation is guaranteed for all node operators and users looking to contribute to the network. Wonderful. That is wonderful. So that's all we're going to read about right now. Let's look at the ChainLink price live data. The live ChainLink price today is 2054 USD with a 24-hour trading volume of 1 bill and some change. We ain't going to read it all. We update our link to USD price in real time. ChainLink is up 0.59 in the last 24 hours. The current coin coin market cap ranking is 11, which is extremely good, with a live market cap of 13 bill. It has circulating supply of 638 mil and some change. Coins and max supply is not available. Okay, so I'm gonna leave you guys with that. Go look at ChainLink, not financial advice, but I think this is a very important one right here. On that note, smash that like button, subscribe to the channel. This is Crypto Dough. I would like to get to 10,000 subs. I need your help on doing that. On that note, peace, blessings, and love. And remember, put on your seatbelts. It's time to take off. Crypto Dough. 5, 4, 3,